Hello everybody, this is AK. I'm back. So today I'm in an aircraft carrier. I usually don't play aircraft carriers because I don't think I'm very good with planes. But once in a while when I feel like chilling, right, I'll bring one of the aircraft carriers out. In fact, submarine is quite good for chilling as well. But aircraft carrier is a different kind of chill lah. And when I'm in an aircraft carrier, usually I don't get sweaty in the sense that I don't try to deal as much alpha as possible. I don't try to deal as much damage as possible. Usually I just try to provide support for my teammates, and spot enemy ships and especially destroyers, very pesky destroyers. I just try to keep them spotted for my teammates. So let them do the damage, right? But if I do get an opportunity, I'll try to damage some ships as well, right? So anyway, today I'm going to talk about the banks again. I think I might have made a boo-boo by saying that I might want to sell some of my investment in the local banks, DBS, OCBC and UOB. I think it got some people not just worried and thinking, but a bit fearful. Right, I already made a video yesterday about this, but this is another one because someone asked if I think that bank prices, stock prices have peaked and that they are going to go down from here on, or if they go up a bit after that they're going to start going down because I think a recession is coming and all that kind of stuff. Okay, like I said, right, I have a plan and I want to take some gains off the table if the share price goes up much higher from here, but I don't know what share prices are going to do. I say if they go up much higher from here, I'll sell some. And after that, will they go up higher or will they go down because of a suspected recession? I don't know, right? We have to do what we think give us what we think will give us peace of mind, right? So if we feel that our investment in the banks right now is quite a small portion of our portfolio and we don't mind just holding, right? Even if the price goes down, we are not disturbed, then just hold, right? But then if we feel that, we have a very big investment in the banks and if the price goes down, we are going to look back and regret, why didn't I sell some? Then obviously the answer is, maybe we should sell some when the price goes up a bit more or a lot more from here, right? It's all about our own psychology as well. We are all wired differently. I've said this many times before, but maybe not in recent times. I've not said this recently, but we are all wired differently, right? We have different risk appetites. We have different ability to stomach volatility, right? So we have to do what we feel is right for us. But when it comes to the bank's fundamentals, right, I'm not worried. So people ask me, is it okay to invest in the banks today? And I say, well, I can't tell you whether you should invest in the banks today. But if your question is it okay to invest today because, is it risky? Will they go kaput and all that kind of stuff? I'll say, no, the banks will be here for a long, long time, right? They're not going to go kaput, right? Fundamentally, they're okay. And then they say, but interest rates coming down. And I've said this many times before, if the bank's only source of income is interest income, then you should be worried, right? But the banks have been growing their fee income, the non-interest income, right? So for example, DBS, they posted record net fee income, right? It's up 22%, it's $1.3 billion, right? Up 22% year on year, up 32% quarter on quarter, right? So, I mean, like I said, 1/3 of the family offices that set up in Singapore, these are basically entities that manage wealth for the ultra rich, right? Managed by DBS, right? And this has seen like 35% year-on-year growth, 39% quarter-on-quarter growth, right? And then UOB also, the net fee income rose 20% year-on-year, right? And OCBC also reported 36% quarter-on-quarter increase in non-interest income, right, to $1.3 billion, which is another reason to like OCBC, right? And fee income also rose, right, 14% year-on-year. And this also in wealth management, loan-related investment banking, that kind of stuff, right? They collect fees. Banks are not just collecting interest owed to them. If you borrow money from the banks to buy your home, for example, or buy a car, they are also collecting fee income, and this is growing to be more important. And this makes the banks more resilient, right? So interest rate comes down, interest income goes down. All this non-fee income, growing non-fee income, will be buffers, right? And then I say, will the banks go kaput? I always say, if you want to look at whether companies will go kaput, you look at their balance sheets, right? And then if you look at the banks, the CET1 ratio, right, like I said, the common equity tier 1 ratio, they're all very strong, right? DBS, you have a CET1 ratio of about 17%, UOB is about 14%, OCBC is about 17%. They have a lot of excess capital, which is why they are able to have such a meaningful, very, very strong capital return program to create value for shareholders, special dividends and share buybacks, right? So when people say, oh no lah, they're going to cut dividends lah, all these things they promise they will cut back because of the recession that's coming lah, uncertainty in the global economy lah. And I've said this before, I call it fear-mongering, right? Because these very strong capital ratios, right, will be able to support dividends. No question about it, right? And even if things should slow down, and if the banks were to choose to do it, they can actually increase their dividend payout ratio. OCBC's dividend payout ratio is 50%, right? They could easily increase it to 60-65% and maintain the DPS. UOB as well. The only bank that you have to question a bit is DBS, because their dividend payout ratio is already at about 65 or 70%, if I'm not mistaken. That's why DBS is able to sustain such a high dividend yield, because they pay out a lot more of their earnings compared to the other two banks, right? And so when people are attracted to DBS dividend yield, I always say, well, what's their payout ratio, right? But I don't say it often enough, I mean, people do what they feel comfortable doing. But, if there's a downturn and earnings should come down, earnings per share should come down, both OCBC and UOB have more headroom to increase payout ratio to maintain their dividends if they should choose to do so, right? But they are a bit giam siap lah, so maybe that won't happen. Okay. Yeah. So I hope you get the message that I'm trying to put across in this video. The banks will not go kaput. The banks are strong. The banks will continue to do well. Maybe not as well as when interest rates were higher. Maybe not as well as when, before Donald Trump came in with his crazy tariffs. And the tariffs, we're going to see the effect of those tariffs. I'm very sure second half of this year and next year, we'll see the tariffs. It's going to slow down global economy. And it's going to be inflationary if they stay the way they are now, right? If he doesn't dial back any further, we are going to see some bad things happening. But our banks can handle the headwinds. They can deal with the challenges. I'm not worried about that, right? As to whether you should sell or hold, or even whether you should buy more, yeah, it depends on your own risk appetite. It depends on your stomach for volatility. Like I've said before, it's very personal, right? I'm just sharing what I'm doing. I'm not telling people what to do, right? So worry, but don't worry so much until you are fearful, right? Don't be overly optimistic, but don't be overly pessimistic either. Be pragmatic, do what works for you, right? So if AK can talk to himself, so can you. Bye-bye.